With the Bank of Canada announcing that they may move up the timeline for increasing interest rates, bond yields have spiked, and as a result, so too have 5-year fixed rates. And that's what we're going to talk about today, is everything related to variable and fixed rates and where they're at for the month of November 2021. The definitive guide on how to manage your credit: product, penalty, price, in that order. It's never been more important to get your mortgage right. Okay, so let's get into it. Let's discuss interest rates and what's going on in the month of November here, or more specifically, what happened in the last couple of weeks of October. Because what we saw fixed rates spike quite substantially, while we saw variable rates come down. Yes, the discounts got bigger. So what's happening here? Why all the fuss? Why all the mayhem? Let's talk about that and get into all the mayhem right now and take a quick look at the 5-year bond yield, because this is the chart that is used to price 5-year fixed mortgages. And what you can see is if we go and we take a look earlier in the month here, or basically late September, early October, what you see is that interest rates were around 1%, 0.75% for a 5-year bond. And as of right now, they're up about 1.5%, or up to about 1.5%, up a half a percentage point in the last couple of weeks. And the reason for this is really simple. We saw the Bank of Canada come out and move along their timeline with respect to when they could start increasing interest rates. So prior to October here, the timeline for increasing interest rates was the second half of 2022. Now the Bank of Canada has moved that to the middle 2 quarters of 22. So what that means is it could be second half still, but they also gave themselves the bandwidth to do it between April and June if they saw fit. And this is largely to do with the numbers with respect to inflation. And obviously those numbers are quite high. We've seen historically high inflation numbers for the last couple of months. It was widely expected that the transitory inflation numbers would come down in October, November, December as those baseline effects disappeared from the pandemic deflation that happened. But what happened is we saw supply chain issues that have led largely to higher prices across the globe. Now, this becomes a really interesting conversation because normally in a normal functioning economy, inflation is largely caused by higher than expected growth. And when you have higher than expected growth, you increase interest rates, and then all of a sudden inflation starts to come down because you are slowing growth down. But in this case, what is not happening is higher than expected growth. In fact, the growth levels are lower than what is expected. And we're seeing these supply chain issues have an impact on global prices. So this is a global problem, not a local problem, which makes it really, really interesting with respect to what could happen from an interest rate perspective, because if you do increase interest rates, you risk reducing growth, but you may not actually have an effect on inflation. So really interesting times, really interesting conversations happening around this. And basically what happened with respect to the bond markets is they are now pricing in more rate increases, which is causing bond yields to go up and therefore 5-year fixed rates to go up. So let's take a look at what's happening with interest rates specifically and see where we're at compared to where we were a month ago. So first and foremost, 5-year variable. Now these are full featured rates. Prior to this, best 5-year variable rate that you could get that was a full featured rate, didn't have a bona fide sale clause or no refinance clause, and all the bells and whistles, was about 1.35%. Yes, we had one individual in the comments section that said he got that 2 months ago, but what he got was either a big bank mortgage that has a higher lock-in rate if he chooses to lock in, and therefore a higher penalty down the road. It's also a mortgage that's compounded monthly rather than semi-annually, which increases the interest rate or the effective interest rate, the actual interest rate, and a whole bunch of other things that come along with big bank mortgages or discount mortgages. This, and what you'll see when we get to the discounted rates, is this is the exact same rate that you can get on a discount mortgage right now. So if given the options between a discount mortgage and a full featured mortgage, it obviously makes sense to take the one that has the most features and the most flexibility, because here's the thing that's going to save you money in the long run. It isn't necessarily choosing between a fixed and a variable rate and trying to time the market. It is largely to do with the flexibility in the mortgage that will allow you to adjust and get other mortgages that are cheaper as time goes on. So 5-year variable, full featured. This is the lowest I've ever seen this in my career, 1.15%, absolutely amazing rate. With respect to 5-year fixed rates, this was around 2% at the beginning of October. We're now seeing it priced at 2.59%. So this is up quite substantially over the last couple of weeks. And, this doesn't mean that we should be locking in, because we're still getting a significant discount to the fixed rate if we're in a variable, which means we're still saving money. But what it means is we should be watching rates. Now, what is likely going to happen here over the next little while is as the bond market starts to see what happens in the economy, and as we get get closer to that April, May, June, July period. And as we see different things happening in the economy, that's going to affect the bond rates. So they could go up, they could also come down. They've given themselves a lot of room to come down should the economy not be functioning as quickly and efficiently as it is widely expected that it will be going into the new year. Now, that is, of course, the 5-year fixed rate for a full featured mortgage with insurance or with more than 35% down. Obviously, insured mortgages and mortgages with 35% down or more are the least risky for the banks. That 20 to 35% down payment range is the most risky for the banks because that is the range where they no longer have insurance and they have the least amount of money down. 5-year variables right now for those on a full featured mortgage are 1.35%. to 1.45%. Obviously, the more you put down, the lower the interest rate. And 5-year fixed rates are at 2.64 to 2.74, which is considerably higher than what they were again a month ago. Now, keep in mind, we're seeing daily rate increases right now. So you may see lower advertised interest rates out there. That could be a couple things. It could be lenders that haven't already increased their interest rates. It could also be that there are websites that haven't updated their rates. Either way, there still is an opportunity to get in slightly lower than what these rates are, but you really need to have a broker who's going to dig hard in order to find you those really good rates. Now, by the way, before we get into the next section, which is the fully discounted rate section, if you are interested in figuring out how to get the lowest rate without getting screwed, without getting the bona fide sale clause, the higher lock-in rates, the big bank penalties, we do have a course for that. It's called ratesecrets.ca, and it is basically secrets to getting the lowest interest rate. It teaches you how to negotiate with your bank, how to negotiate with your broker, how to get a lower interest rate, and how to make sure that you get the absolute best deal possible without having any landmines or surprises. We've priced that course so low that we can expect that most people will get at least 10 to 50 times their money back. In fact, we've put a special offer in there that if you do get your mortgage from Mortgage 360, we guarantee that you'll get at least 10 times your money back. Again, you can go to ratesecrets.ca to get that course. And also for those of you, because we did a poll, and it turns out that about 32% of people right now feel like they're having trouble getting their down payment saved. And we created a new thing that's going to be launched in the next couple of days. So stay tuned to this channel. Stay tuned for the advertisements that some people don't like, even though they like getting my content for free. They don't like the little advertisements, but watch out for the little advertisements because we are going to have a down payment accelerator challenge, which I think is going to blow your mind because we're literally going to be able to help people save $1,000, $5,000, $10,000, $15,000 in a very short period of time, teach them how to get that based on a framework that I've developed that is pretty much bulletproof. So watch the channel, turn on the notification bell, hit the subscribe button, make sure you do all of those things so that you have first access to that course. There's going to be a limited number of spots in it as we do basically our first run, but it is going to be there. It's going to be an awesome challenge and we are going to help a lot of people make a lot of money. So with that said, moving on to the next section, which is the discounted rates, insured greater than 35% down. Again, by the way, discounted rates. What's the difference between discounted and full featured? Well, it's one of those things in life. You get what you pay for. If you get the discounted product, you pretty much know that you're giving up features. It's like buying a car. The lower priced one and the higher priced one are different. And it's because they have different features, even though they may be the same model, the same make, and the same color for that matter. So remember when you're getting discount mortgages, and by the way, if you Google lowest interest rate and you find the lowest interest rate, you're probably getting a discount mortgage. There's going to be some limitations. And by the way, if you're getting the lowest rate or really super low rates from a big bank, there are things in those mortgages that are designed to make it so they make that money back off of you. And if you're paying the absolute lowest rate, there's almost always going to be some sort of a catch. And that is true for mortgages that you get from brokers and mortgages that you get from banks. So be aware of those things and keep in mind that when most people start to understand the differences in the mortgages, they're typically willing to pay 10 to 20 basis points more, 0.1 to 0.2% more in order to have, like I said, flexibility options, the ability to switch lenders, the ability to lock in at lower interest rates, the ability to have lower penalties, usually for the price of a cup of coffee a week. And that cup of coffee a week can save them tens of thousands of dollars down the road if they make the right borrowing decisions. So here are the discounted rates. Again, most of our clients don't choose these, but I want to make sure everyone has the best information out there. 5-year variables priced at 1.15%. Again, if you can get a full featured at 1.15% or a discounted one, why would you take the discounted one with all the features stripped away? Second is the 5-year fix. We can get at 2.39%. If If you can get a variable at 1.15%, why would you take a fixed at 2.39% on a $500,000 mortgage? That's more than $5,000 a year difference in the price. We do have a video, which I'll link up here, that talks about what would happen in a worst case scenario of interest rates going up 8 times over a 2-year period. Spoiler alert, it's pretty much break even if you're smart with what you do with the extra money that you save by having the lower payment by taking a variable, but I'll let you watch that video for yourself. Then getting into 20 to 35% down payment, 5-year variables again at 1.15% to 1.25%, and 5-year fixed rates at 2.44% to 2.54%. So those are your interest rates for November. This is changing quickly. I suspect that these interest rates are going to change, a day or 2 or 3 or 4 days down the road, and they're going to change frequently in November. I suspect we're going to see a spike, then we're going to see them come back down a little bit. I'll keep you updated. So again, make sure you hit that subscribe button and that notification bell if you want to be updated on what's going on interest rates. If you're in the market for a mortgage in the next 120 days, make sure you're getting a rate hold locked in with a broker who understands your situation, understands the variables that you need, understands what you're looking for. Of course, you can always apply with Mortgage 360, and you can stay tuned to this channel to make sure that you learn as much as possible about mortgages. So if you found this video useful, do me that favor, hit that subscribe button, hit that notification bell. Please hit that like button so more people like you can see this video, and we'll see you on the very next one. Cheers.